step up. British American Tobacco is the world's second largest listed tobacco group. It was created from the merger of Rembrandt, Rothmans International and Imperial Tobacco under the leadership of Anton Rupert. It has a market cap of 996 billion rand, a price to earnings ratio of 19.3 and a dividend yield of 3%. Is this your proverbial defensive stock? Looking at the share price graph, you would think that this is moving in all the right places.
Moving in all the right places. I mean, yesterday it actually touched R1 trillion at market cap.
First South African company, I believe, to actually hit that trillion.
Hit that benchmark, yeah. So it's, and I think the big thing with the share is it doesn't pull back. A lot of people are against investing in tobacco companies and that, but the reality is it's an addictive product, and they're targeting Asian markets in particular. They're growing their market share over there. And if you've got a product that's going to keep selling, whether it's good times or bad times, that's where you want to be putting your money.
The nail on the head is the addictive relationship it has with its clients and customers.
Well, for starters, it's not really a South African company. Apparently about 11% of its shareholders are here. The balance are in London. And it, of course, emerged from the reorganization of all those Rembrandt, Richemont kind of companies.
We're claiming it as our own anyway.
Yeah,
please don't ruin the party. It hit R1 trillion
the question
in terms of
really,
market cap.
though, of whether it is sort of all-weather stock is, I think it's fair to say that it is a product which people are very committed to. The trouble is, though, it's trading at an 18 price-to-earnings ratio because it's been owned as a emerging market consumer growth story. So my worry is that it would be really defensive if it was trading at a 5 PE, but it's not. It's trading at an 18 PE.
Warren, does that 18 PE worry you?
Look, I think it has run hard, but historically it just keeps running hard. And one of the things with most defensive shares, I'm sure as we get to the others later, you'll see almost all PEs on defensive shares are high because you pay a premium for that defensive nature. You pay a premium to get your money somewhere secure.
High PEs shouldn't worry you. You are a growth investor. May I remind you of your philosophy?
No, look, but the point is I'd like to be rewarded by virtue of very low share price for a company whose business is going out of business in the next 10 years. Because we know that globally, cigarettes are under extreme pressure. What these guys have done...
They have been for a long, long time, Paul, and it's had no impact on the share price.
Because they've been, again, perceived as a company that can take and premiumize their customers. So in countries like Indonesia and South America where they've been expanding, they've been able to upsell people to Lucky Strike and to Pall Mall and those 4 global great success brands. So I don't know, at 500 Rand a share, defensive, I'm not so sure.
Warren, it's a pretty strong statement he makes that this business is going to go out of business in, did you say 10 years' time?
10 years. I'd give them 10 years.
Let's get your thoughts on that rather strong statement from Paul.
We can survive a lot of crashes through 10 years. It's only 5 years since the last one. 10 years, you've still got some time to keep your money safe in BTR. So for me, I'd be putting money safely in there.
Would you be putting money in at current levels?
I think you can definitely wait for some pullbacks, but
earlier you said it never goes back.
Well, there's little pullbacks. It's all relative. But from the point of view, if I had to put my money in with a defensive view, thinking that the market's going to pull back, I would definitely put my money in now.
Are we seeing a case of sour grapes from you in that you've missed this run and now you're never going to put money into it?
We were not only missing this run, we were short this stock for a while in our hot stocks portfolio.
So you've really been burnt.
But it was a fairly modest thing and we had a stop loss on it. So once it went up to 480 or something, we got blown out of it, and that was that. Look, it's been helped also by the weak rand. So it's been doing fine in London-ish. It's sort of muddling along, doing well with the rest of the global market. But it's been helped further upwards by the rand. I don't know, though. I'm quite conflicted by it because I feel that our global equity markets are poised to go higher. This Cypriot nonsense is such a side issue, I don't even know why people are talking about it. And if that's the case, if risk appetites return, people are going to be buying this share as well. So it's going to go up. But I don't think you want to buy it in the event that there's going to be a meltdown.
Warren, hot or not on BAT?
I'm going to go with hot.
Paul, hot or not?
Nope.
You haven't been convinced.